All right, we are live again. So, despite the gold price hovering around $1,700 US, the silver price is barely above $15 an ounce. The paper price is, at least. If you go to the gold bullion dealer, you know that that's not the reality of the situation. But despite that, gold stocks are doing really well now for the last month. I have there on your screen a chart of the US Global Investor Go Gold and Precious Metal Miner ETF, or GOAU. In the ETF, there's a lot of royalty and streaming companies like Wheaton Precious Metals, Franco-Nevada, Royal Gold, Sandstorm Gold, some of the others that make up a large chunk of that ETF. And that ETF, basically over the last month, it got as low as $12.20 on March 31st, and it is now at $18.55, almost exactly a month later. So why are gold stocks doing so well when the price of gold hasn't really gone up that much? And I think this brings me into the rest of the stuff you see there on your collage. It's the constant barrage of headlines now coming from the Fed, coming from op-eds from former Fed members, coming from people from Congress like Nancy Pelosi talking about permanent universal basic income. It's the official Fed balance sheet. The off-balance sheet items are even worse, of course, but the Fed's official balance sheet is a hockey stick now over the last 2+ months. So all these headlines, if you are a mainstream professional money manager with tens of billions or hundreds of billions in assets under management, and you have near zero or zero asset allocation to gold, I think finally the scenario that billionaire resource investor Eric Sprott has been talking about for years, where these professional money managers, these guys in expensive suits that go on CNBC and Bloomberg all the time and talk about all the good stocks and how well the U.S. economy is doing, all the data that is spun. So even if something's bad, even if the global economy is bad, even if the U.S. economy is bad, mostly bad, they will find the one or two good pieces of data to go on TV to talk up their regular stock portfolio. I happened to watch CNBC for about 10 or 15 minutes earlier in the afternoon, and a couple of the portfolio managers, shockingly, while CNBC was pumping the earnings today for eBay and Tesla Motors and some of the others, shockingly though, they did start, some of these professional money managers did bring up the Fed balance sheet. They said all the bailout programs, all these stimulus programs are getting disturbing. They said the Fed is playing fast and loose with the collateral. So I think collectively how all these announcements are coming out, and I put a collage of them on the screen, whether it's Nancy Pelosi talking about guaranteed universal basic income, the Fed expanding its municipal bond buying program. The former Minneapolis Federal Reserve Bank president wrote an op-ed on 5 or 6 days ago, on April 25th, I think, saying that the Fed should go negative interest rates. Now, the Fed did not go negative interest rates today, but it sounds like we're going to be at ZIRP, zero interest rate policy, for a while. And then the new taxes that are coming. It seems that finally, if you add up all these stories, that professional money managers who had little or no gold exposure are finally saying, you know what, the next phase of the gold bull market, maybe they didn't believe there was a gold bull market. Now they're starting to be believers. They're starting to say, I could see higher gold prices in the near future. I don't know what price gold is going to end up at, but I know what the Fed is doing. I know what these other central banks are doing. I know the spending programs President Trump has. I know the spending programs both houses of Congress has. And eventually this is going to mean a lot more inflation. And eventually this is going to mean much, much higher gold prices and a big, big bull market in gold. And I think that is why this is a scenario that Eric Sprott has been talking about for years. I think finally we're getting it now. We're finally getting that scenario. You can see it in the stock charts of the highest quality gold stocks and the major gold stock ETFs, where it looks like the dips are now being bought. A lot of these, the best of breed gold stocks, are in major accumulation phases. Whereas, in the past with stocks, there was tons and tons of buy the dip mentality for U.S. stocks. Well, it appears that now for the best gold stocks that this is the case. So I think a lot more mainstream people, mainstream money managers, are finally on board for the gold bull market, which means that all these guys manage a lot of money, tens of billions of dollars, hundreds of billions of dollars, some of them, assets under management, and a good chunk of them had little to no gold exposure. So Eric Sprott has talked about this. All it would take is about a 1% allocation to gold stocks, and you're having hundreds of billions of dollars trying to go into gold stocks, and a lot of these gold stocks are not that big. So this is I use the analogy in an article earlier today for my patrons that this is a tiny little entrance and you have long lines. So this is like the hot new restaurant or the hot new nightclub, and you have everyone with a long line trying to get in. So lots and lots of headlines here. All of them I think are good long term for gold and for gold stocks, but you can see it in the chart action there on your screen. GoAU and others, where a lot of the dips are being bought. There's little dips here and they're being bought. Little dips on like April 3rd, it was bought. Little dip on April 7th and 8th, it was bought. Another dip on April 15th, it was bought. The dips are being bought now. So there is accumulation. Now, it's not going to go straight up, but there is, I think it's clear in the charts now. Over the last month, professionally managed money that had little to no gold exposure is now accumulating the best gold and silver stocks. So we're going to get this next phase of the gold bull market. The gold stocks are outperforming gold right now. Some of these gold stocks, the best ones, are up well over 30% in the last month, despite the gold price not being above $1,800 an ounce or $1,900 an ounce. We will get there at some point, but the gold stocks are performing very, very well right now. Not all of them, but the best of breed are being accumulated. You can tell it with the price action in the charts. Are you crazy for shorting airline stocks? Aren't they going to get a bailout? I don't know. The rules change. There's all different types of bailouts. We don't know what types of bailouts all these different companies and industries are getting. It could change tomorrow. It could change the next day. It's dangerous. If you're going to, this is just my opinion, if you're going to short any of these things, J6, you need to be hedged. You need to maybe have some calls just in case the Fed decides or the US government decides that they're going to take an equity position in American Airlines or United, like what they did with AIG. And the US government's just going to overpay for those shares. They're going to put more cash on the balance sheet of these airlines, and then they're going to buy and hold those stocks for 2, 3, 4, 5 years and then sell them later. I wrote about this in an article for patrons. I want to say like 4, 5, 6 weeks ago. I've written so many articles, it's tough to remember exactly when. It was about volatility and bailouts. There was one article, I think, on volatility and hedging strategies, and then another article a day or two after that about the different types of bailouts and how not all bailouts are going to be the same. So it's a very dangerous environment to short right now, because look what they're doing with the oil stocks, about the lending facility. They're talking about that. I mean, they're just changing the rules. They're playing fast and loose with it. Trump is acting very similarly to what Herbert Hoover and FDR did during the 1929 Depression. Okay, super chat from Steven. Do you have a target for where silver might move to if gold is at $200 an ounce by the end of the year? $2,000 an ounce by the end of the year. Price targets are tough. I would like to see silver well over $30. The problem with silver right now, besides the paper price manipulation, is there is too much silver byproduct from the copper miners. So we really need to see the copper miners, a lot of them go bankrupt. And then once that happens, I think that will really help silver. For those of you expecting like $60, $70, $80 silver by the end of the year, I would not hold my breath. I would be happy if silver gets above like 20, 25, maybe 30 by the end of the year. And silver will hopefully gain momentum after that. It's going to take some time for silver to catch up. The other problem with silver is on the demand side. The industrial demand side for silver, Stephen, may have collapsed. So you have a case now where investment demand is strong for silver, but industrial demand has collapsed, and market participants are trying to figure out how much industrial demand has collapsed and how sustainable investment demand for silver is. See, it would be better for silver if industrial demand was still pretty strong and investment demand, because then you'd get a situation, a short squeeze similar to palladium. What happened to palladium in 2019, for most of 2019. That would be best, where you have industrial demand and investment demand, because you had that for palladium with the short squeeze. We need some silver miners to go bankrupt, some silver byproduct to come offline, then maybe we're going to get a big spike in silver price. Silver is lagging really, really bad. What's good, though, for silver is that the copper miners, there's really no capital available except for royalty and streaming companies to do gold or silver byproducts streams for some of them. But most of the copper miners will not get a bailout. Oh yes, almost 300 people watching. Please smash the like button. Or click or tap is fine. Thank you for the super chat, Michael. What in the world happened to Fabian Calvo? I haven't seen or heard from him in years. I don't know. I used to speak with him. I don't know what happened. I haven't heard from him in a long time. You know who else I haven't heard from in a long time? He was really, really smart. Do you remember Ron Hara? I haven't heard from Ron Hara in years. I don't know what happened. I haven't heard from him in like 5 or 6 years. It's been a long time. I used to speak with Ron Hara every day. We used to be really good friends. I don't know what happened. Yeah, so I think silver is it's gonna take some more time for silver. Probably 2021, 2022. We need industrial demand to come back online. We need investment demand to stay at these levels or grow. People to start to have real inflation fears. And then we could get a palladium scenario where the paper price market, the leasing market, is overwhelmed. And then we need the copper miners to go that have a lot of silver byproduct. We need a lot of them to go bye-bye. Yeah, so all these different articles that you can see on the screen there, the Fed's official balance sheet is growing around 200 billion per week. That was the pace the last time I checked. That was last week's pace. So it was growing. The Fed's official balance sheet was growing, I think, over 300 billion per week. It slowed down a little bit, but with all these new stimulus programs, it could go even more than that. Steven asks a question, super chat. Thank you for the super chat. Who might have bought USO's June crude oil roll with so many brokerages freezing trading in the front month futures? How about the Bank of China? How about one of the Chinese banks? How about ICBC or Bank of China? According to Emma Molman and some of the other people I've spoken to, it sounds like the losses for some of these Chinese banks on oil futures contracts in the derivatives market and the OTC derivatives market is way, way more than the 1 billion number that's being claimed. My buddy George Gammon, if he's listening, he messaged me in the afternoon, and he said in his stock brokerage account that his stock brokerage, I think it was TD Ameritrade, they couldn't get him the units to short for USO, that everyone's trying to short USO, so he couldn't get the shares to borrow. William says 200 billion a week in new balance sheet increases by the Fed. That's 10 trillion a year. And that's why you have experts like Dr. Mark Faber and others. I guess that interview was lost. I'll have to email. Stupid Zoom screwed up that interview. It was recorded and then Zoom screwed it up. But he said that before the year's over, the Fed's balance sheet will be over 10 trillion. Official balance sheet. IBJI USO did a reverse stock split. USO did a 1-for-8 reverse unit split. So it did not super spike. To save it from crashing to 0, they did a 1-for-8 split. And guess what? All the professionals are going to probably start shorting it again because it's a piece of garbage. Definitely, if you want to know more about USO, Eric Townsend of Macro Voices and Jim Bianco Research had a really great podcast they released in the last day or two over on Macro Voices. That is a must listen about problems with USO. OKOL did a 1-for-8 reverse split too? I didn't know that. Iggy says he bought Sandstorm Gold at the low, so you got it below $4 a share in the liquidation, the margin call at the beginning of March. Congratulations, you did very, very well. Oh, looks like I hear a helicopter in the background. Hopefully it's not for me. Actually, I'm not that far from Washington, D.C. It's probably just like a government or military one. With how the Fed trades stocks on inside information, I wouldn't be, with how Congress trades stocks on inside information. Maybe I should do a show on that since a lengthy article just came out in the last couple days. I would not be surprised if most of the people in Congress in both parties have enormous gold stock positions. Okay, super chat from Durf Narf. Hopefully not too off topic, but any more word on the Eagle plan Kyle Bass was talking about? Thanks for all your hard work, Jason. You're welcome. I have not heard anything. I would check Kyle Bass's Twitter. Has he announced anything? I will take a look at that after the show. I have not heard anything. Kyle Bass said in the series of tweets about the Eagle plan that we could get information as early as yesterday, Tuesday, April 28th. So I didn't hear anything, but I will check. Kyle also follows me on Twitter, so I can message him. Yeah, so we don't, I haven't heard anything yet on the Eagle plan. I would check Kyle Bass's Twitter to see if he put anything out. I imagine he would want to market that, though. Mike asks, is it time for a uranium play? I have an extensive uranium article highlighting all the risks in the uranium industry behind the paywall on my Patreon. I wrote it last week. Took me over 4 hours to do the article. It's extensive. IBJI asks if Eric Sprott bought out Mag Silver. He did not buy Mag Silver because Mag Silver has an enormous market cap. Sprott put, I think, 60 million Canadian or about $40 million investment into Mag Silver. I think he got a private placement. Oh, thank you for the super chat. Oat MMC. Coffee for tomorrow. I appreciate it. So I could go into details about all the Fed bullshit, all the Congress bullshit. The bottom line is they want to print and spend money, and as you can see there, they want to increase taxes too now. So this is all part of the stagflate and tax and lie narrative. So There might be some deflation in certain parts of the economy, maybe consumer discretionary items, maybe some asset prices might fall. That wouldn't be traditional Austrian School of Economics deflation, that would be asset prices deflating. But I don't see most people's bills going down, let's just put it that way. The people on Main Street, the Janes and Joes listening to the podcast, most of your bills, and except for maybe consumer discretionary items, I don't see most of your bills going down. I would put the odds at very, very low of that happening. Unless, of course, you downsize your entire lifestyle. But if you want to maintain your lifestyle, your standard of living, your bills are probably going to go up. And all these governments, all these central banks are all about trying to devalue their currency now. I'll save this for another show. Emerging market central banks start buying risky bonds in another risky shift, another Bloomberg article. I'll save that for another show. All these governments are all doing crazy kamikaze behavior. The oil stock CEOs, the large ones like British Petroleum, Chevron, ExxonMobil, looks like they're going to be borrowing billions of dollars to maintain their dividend. So they don't have to cut their dividends so their share prices don't crash more. Thank you for the super chat, Denny. Is it worth speculating in the U.S. anymore? Speculating on what? It's a really vague question. What are you speculating on? Are you speculating on regular U.S. stocks? Are you speculating on a specific industry or specific company? Excuse me. I don't know what you're talking about. You're being pretty vague. Are you going to buy the dip on stocks? I don't. It was really hilarious hearing CNBC spin all the earnings today. Because they're like, oh, eBay had very solid online sales. But they're like, oh, you have to keep in mind, though, it was still lower than all of 2019. But it's still good. That was like what I heard in the 15 or 20 minutes I had CNBC on, and that's all I could take of it. But the portfolio, some of the stuffy shirt, mainstream finance, portfolio managers with a lot of assets under management who hate gold, they're starting to sound a little like gold bugs now. You want to speculate on junk bonds? No, thank you. Isn't HYG and LQD, those are below the price the Fed started buying them. Why do you want to buy those? Yeah, one guy was in the live chat yesterday. He was like, Jason, how come you can't say anything positive? I was like, the economy hasn't even restarted. What are you talking about? I mean, there's online sales. People are buying stuff online. It's not a lot of other positive things right now, unless you're holding gold, unless you have gold stocks. It's not a lot of positives right now. The economy hasn't restarted. We can't, there's like almost nothing positive to talk about. When the economy restarts, okay, maybe we can talk about some positives. So I think this trend of all these crazy headlines from Republicans, from Democrats, from President Trump, the Trump administration, from the Federal Reserve, for new spending programs, new bailout programs, is going to continue. And if you're a mainstream professional money manager and you don't like gold, or you hate gold, or you'll hold your nose and buy gold, you're going to see this and say, the Fed's balance sheet is already a hockey stick. It's going to get even worse. And that's not even the real number. My podcast listeners know the real number is the off-balance sheet stuff. All the special purpose vehicles and all that. The on-balance sheet, the Fed's official balance sheet, is nowhere near the real number. So people are just, I mean, the average money manager is not going to care about the off-balance sheet stuff. He's just going to go look at him or her. He's just going to go look at the on-balance sheet stuff and see the hockey stick there and say all this increase in the central bank balance sheets, that's going to be inflationary at some point. That's going to be good for gold. That's what Tavi Costa said. Hedge fund manager Tavi Costa said a couple weeks ago. Go back and listen to that interview. He said that the main beneficiary of all this central bank balance sheet increases would be gold stocks. Okay, everyone, I want to thank everyone for listening. Thank you very much to my Patreon account contributors who make this all possible. paying my bills, allowing me to grow my tiny little small business online, focus on content, research, information, analysis, and financial education. Thank you very much to my monthly PayPal contributors who chip in once in a while. Also, you can donate. I think the top 6 I take, the addresses are in the information, top 6 cryptocurrencies. The addresses are in the information and description section below each video. And my Patreon is only $5 a month. There's a lot of good research beyond the paywall. Dozens of articles. A lot of audio podcasts, technical analysis on charts. It's not just oil stocks, although there is a lot of oil research. Not just gold stocks, there's a lot more than that. There was an extensive uranium piece about 4 or 5 days ago. And I do look at other markets. Okay, a couple more super chats here. William, super chat from William. Do I feel that the oil stocks have bottomed, or could the big oil stocks truly go lower than they were 1 to 2 months ago, namely ConocoPhillips or Phillips 66? No, I do not think the bottom in oil stocks is in. What we saw with British Petroleum, yes, the stock didn't go down anymore, but now the balance sheet's a mess. I was just showing my brother in the last 24 hours how to read a balance sheet because he's starting to speculate on oil stocks. And I was showing him the British Petroleum balance sheet. They've added a lot more debt. Another $5 billion in debt in just the last couple months. Their cash flow collapsed. British Petroleum's or BP's operating cash flow collapsed. I think Q4 2019 it was over $7 billion in operating cash flow, and it dropped below $1 billion. So their cash flow has totally collapsed. And they added over $5 billion more in debt, I think. So no, I don't think the bottom is in. I think what the oil company executives at Big Oil are doing to prevent their stocks from collapsing is they're hoping that the oil price, this is only temporary. So they've added a lot of debt to pay their dividends, to not cut their dividends. We have had a rally in oil prices, but there's no signs demand. The main problem with the oil market is still demand. Demand has collapsed. I've seen no evidence demand is coming back. So no, I don't think the bottom is in yet. Random Worldly Words, thank you for the super chat. I think big dip in the S&P 500, likely to take the gold stocks down a notch. Might buy that dip. Can you comment? It's possible, but like I said, a lot of money managers are looking at the balance sheets of all the central banks, especially the Fed, because the Fed's balance sheet has grown the most lately, the last 2 months, 2.5 months. And so the dips in the gold stocks are all being bought. So if there's a big dip, people will buy more. If there's a little dip, I think people will buy less. But I think people are accumulating. We are in the accumulation phase. I wrote an article about that for patrons describing how a professional money manager with a lot of assets under management, tens of billions or hundreds of billions, would accumulate a large gold stock position without moving the stock price that much. That's behind the paywall. So I think that is occurring. So the stock market might rally, but I think gold stocks will outperform the stock market. We've already gotten outperformance, I think, in a good amount of the gold stocks the last couple of weeks. Super chat from Lots of Rocks. Can you talk about your thoughts on the market going up in nominal terms, but continuing downward trend in real gold terms, historic comparables? You mean the Dow to gold ratio? Are you talking about when you want to sell your gold to buy stocks? You're nowhere near there. The gold price is going to have to go thousands of dollars higher. You want gold to gain a lot against the Dow. They can manipulate the paper gold price for a while longer, but then we'll see what happens with the mining companies, how many come back online. We're starting to see more mining companies come back online now. I haven't seen any news stories that a lot of the gold refiners are back online. But I've seen mining companies start to come back. But there is a bottleneck still because if the refiners are not taking those doré bars from the miners, there's not going to be gold coins and bars for the LBMA, the COMEX, and you to buy at the gold bullion dealer. We're in unprecedented territory here, so historic Dow to gold ratios may not apply. Things can get even wackier. All those other times on those Dow to gold ratios, there was at least one currency on a gold standard. Prior to the U.S. going off the crappy international gold standard with President Richard Nixon in 71. So I don't know if there's a fully accurate historical comparison because we're in very uncharted territory now. All the central banks are going nuts. This is the first time every single currency is unbacked, is total digital debt-based fiat. There was also no euro-dollar market or other craziness or over-the-counter derivatives markets in any of the other times where the Dow to gold ratio. So I'm not sure how accurate it is. Now, if the Dow to gold ratio gets to where it heavily benefits gold, then maybe it's time to trade in gold, but we're nowhere near there. Yeah, you're nowhere near there, so this is not the time to be wanting to sell your physical gold to go buy rental properties or go trade it in for real estate or trade it in for dividend stock. We're nowhere near there. This is historically unprecedented what's happening right now. But at some point, if the Dow to gold ratio starts to heavily favor gold, I mean, it will be smart to trade in some metal for some other assets, maybe real estate or stocks, or a functioning business with cash flow. We're nowhere near there. That's off a stock exchange. Steve says the Patreon app is not good. Steve, you can just log in through your laptop or your desktop computer. I have no control over the Patreon app. You should be able to just get an email from your phone. So when I send out an article or an audio podcast, you should get an email on your phone that says there's a new article for you to go read or an audio podcast for you to go listen to. Okay, I want to thank everyone for listening. If you want to read more of the nonsense that Nancy Pelosi, the Federal Reserve, this former Minneapolis Federal Reserve Bank president, talking about how, and normally the Fed does listen to this guy. I don't want to talk about the article because it's just going to anger me, about how the Fed needs to go to negative interest rate policy next week. Just ridiculous. These are all academic eggheads. If we go to negative interest rate policy, almost everything with the discounted cash flow modeling and net present value of future discounted cash flows is priced off of the risk-free return on the 10-year treasury. So it has to be positive. If they go negative, it's going to destroy economic calculation if we go to negative interest rate policy. Danielle DiMartino Booth has talked about this. When Europe went to negative interest rate policy and Japan had real negative rates, they had to borrow the U.S. 10-year U.S. Treasury to do discounted cash flow formulas. Well, what happens if the U.S. does that too? The private sector is not going to be able to do economic calculation, which is discounted cash flow modeling. Armored Ghost, are you joking? Oh my God, I can't believe you're asking this. Is the suicide hotline a pandemic-proof job? That's not a good job, buddy. You need to find something positive. Okay, everyone. Thank you for listening. That's it for tonight.